Crude rebounding some today, but still in the red this week, reporting its largest weekly loss that we have seen since October. So here to talk a little bit more about that, what we could expect going forward, we want to bring in Jay Young. He's the CEO of King Operating Corporation. It's an oil and gas operator based in Dallas, Texas. Jay, it's great to have you on the show. We know it all comes down to supply and demand when we talk the price of oil. So what's your read on the dynamics at play in the market right now?
Yeah, well, we're seeing a big, huge hangover right now from the pandemic and what happened prior to that with Saudi Arabia, Russia putting all of this oil in the market. Now, we're seeing supply and demand coming back. Now prices are around $60 a barrel. I can see them. I can see them going higher, but I don't know if I can see them going through the roof as some people have talked about. There's been Goldman Sachs and. Beg pardon?
I'm interrupting you because you just talked about prices not going through the roof. And that IEA report looking at global demand actually talked about we may never get back to where we were. So my question to you is, how do you make money? I realize people still need oil because your formula, acquire, develop, and divest, that's different than traditional oil, which is acquire, develop, and hold.
Right. Our project and what we do is we scale a project and then we'll exit. And what we're doing is scaling it during a price when the price is coming up. And it may not reach the very pinnacle, but it's coming up. And that's where we make our money. We're not looking at projects that need $80, the big shale projects where you need unconventional drilling and fracking and all that. That's not what our goal is. Because that does need your higher prices, and I don't believe worldwide we're going to see huge $100 oil in the future. I think Saudi Arabia, Russia, I think they're too smart for that.
Interesting. So you don't think we're going to get back above $100 a barrel?
I don't see anything right now that's keeping it down, and what I mean by that is I'm talking about institutions coming to the market. Your rig count's down. Everything is just not working to where, you're seeing prices stay down. They're just going to continue to climb. But, I started thinking about this, and after reading some stuff in the Financial Times, and what Putin said, I'm ready to replace every barrel of oil that the Biden or the United States does not drill right now. And what that's telling me is they don't want prices to go to $100 a barrel because, in my opinion, when you get to $100 a barrel, a lot of institutions will come back on the market and start, putting money in these public companies' pockets, and then they're going to go drill and drill and drill. And as you see production go up and up and up, then what's going to happen is you're driving out all these different Saudi Arabia, Russia. I mean, remember, all these countries, that's how they make their money. That's how they make their livings, is by selling oil to foreign countries. So they're not going to let it go back to $100 a barrel and then all of a sudden just go crazy, and then everybody gets back in the business and it pushes up our supply here. So because when they push up our supply here, we're not buying oil from them. They don't want that. I can see a $60 to $80, next 3 to 5 years before we go greener. I don't think we'll ever go green, but I think we'll go greener. But before we go there, I mean, I could be wrong, and you could be say $80 to $100 a barrel, but I'm just more pessimistic in the way that our company and what we do in our funds. We're going to be more conservative, and we hope for 80 to 100, but we may only see 60 to 80.
Well, as you said, it does make sense at the start of this. You pointed out how you structure where your formula for investing and developing and then divesting. So what does it mean, though, for average investors? Because at $60 to $80 a barrel, that's pretty good for the producers in the United States, isn't it?
It is very, very good, especially for somebody like us that's a private company. Now, if I'm bringing on a lot of debt and I've got to bring on a lot of debt to go drill a lot of wells, not so good for a lot of public companies. But if prices go to, and it's the reason why is because if you give money to oil and gas companies, they're going to take it all day long because we hate chasing that money all the time. And if somebody's going to give it to us, then we're going to take it. And if oil prices go to 100, that's what happens. So we would much rather, in my opinion, and like I said, my family's been in the business for 100 years. We've seen quite a few cycles. What we'd like to see is healthy. Healthy, in my opinion, is $60 to $80. We can still make money, really good money. We can drill good wells, and we can keep it to where, we're not getting too many people in the oil business. I mean, I saw so many people in the oil business when oil was at 100, 110. I mean, a guy that was doing absolutely 100%, 180-degree job the other direction. Yeah. He was in the oil business, and that's what happens when you see things go too crazy. And I'd like to just see us, whoever's in the oil business and has been for years, stay in it and profit.
Well, we will see how this all plays out. But Jay Young, CEO of King Operating Corporation, we appreciate you taking the time.